Tim Carter. I'm a client portfolio manager on Npower's optimization desk, and welcome to this morning's market update on Friday the 31st of October. So 3 key points today driving prices. Number one, the interim gas deal for supply to Ukraine from Russia has finally been agreed and signed overnight, following the strong indications yesterday that a deal was close. Number two, power margins today are very comfortable with strong wind and warm temperatures driving down demand, while the gas system is also oversupplied. And finally, number three, demand forecasts for next week have been revised slightly higher on cooler temperature forecasts, and Dungeness nuclear power plant has been pushed back a further week, a slightly worrying sign, but not enough in isolation to support prices. If you'd like any more information, please contact us on the email address provided. Otherwise, for a bit more detail, please continue to watch. Prices have come off further today following the confirmation of Ukraine's gas deal, which will ensure vital supplies to Ukraine over the winter period in return for payments part-funded by Europe. This doesn't feel like the end of the conflict in Ukraine though, as the deal is only for the winter, and with the conflict rumbling on despite the ceasefire, it may not be the last we hear of Ukraine. Gas nominations today though suggest line pack will close 15 MCM long. This is adding further pressure to the price drop as UK production has picked up and demand from IUK exports, CCGT and domestic demand have all fallen away with the warm temperatures which are forecast at 10 degrees above seasonal normal today. The front month contracts are now trading nearly 2 pence per firm down on where we closed where we opened this time yesterday. They're now trading at 52.15, with summer 15 also down at 51.4 pence per firm. The power system has also got very healthy margins today, over 11 gigawatts of spare capacity as the wind forecast picks up. We're currently generating 4 gigawatts of wind, but this should reach nearly 5.5 gigawatts later today over the peak demand period. Spare capacity on the power side may become a little bit troublesome next week as the temperatures dip by around 6 degrees, and with the nuclear restart for Dungeness being pushed back another week, we'll become a lot more dependent on these wind forecasts, which look reasonably healthy for next week. Still, December 14 power contracts are now trading 60 pence per megawatt hour down on the close at 48.03. This is mainly pressured by the gas prices, while Q1 15 is yet to trade but looks a little bit firmer, however still offered 40 pence per megawatt hour lower than the close at £49.18. Meanwhile, oil has slipped $1 to $85.5 per barrel on more weak demand forecasts, prompting investors to think twice about any expensive capital projects such as the deep water explorations in Asia. That's it for this morning's update. As always, if you'd like any more information, please contact the desk. Thank you.